All right, what's going on? Today is Tuesday, the 16th of January, 2024. And let's look at the market real quick here. And we're still stuck in this range of approximately 3%, just chopping sideways. Finally have a decent down day, down about 0.5%. I feel like we could definitely come down farther here, or should. I mean, this is a massive run up with essentially no give back except for this. I don't really want to put on a position because I feel like it's going to go down right now. But yeah, I just need to be in. I need to be in the market because right now I just have a hedge, another hedge, and this leftover iron condor that I'm just going to get rid of here soon and probably never go back to iron condors ever again. So with that being said, this purple defined risk account has most of its buying power available. I mean, it's only using 8%, 9%. So I need to get a trade on here. I just need to be, I can't wait for the perfect time, right? You can't, it's impossible to get it in the market at the perfect time. So I just need to get a position on here and be in the market. So that means I need my next 1122. And I also want to convert, instead of being in SPY, I want to be in XSP, which is just a smaller version of the SPX. I mean, it's essentially like SPY, except there's no dividends, you don't get it, there's no assignment risk, and it expires to cash instead of stock. All right, so going here, we have a good spike in IV, so that's helpful. I mean, definitely not required, at least in theory, for this strategy. Let's see, if we go back here, VIX is up. It's still only about 14, which isn't very high, and it's up 5.5% on the day. So the 1122 come down here to roughly 120 days, and oops, looks like I still have this selected. I don't know exactly the 1122 strategy here, but the best I can figure is I need to get at least $1. So that means at the money is the spread that I buy. So that's 31 cents at the money. That's a 40 delta. And then I come down roughly to the expected move here and do a $5 wide. And then I sell 2 of those. So then down here, you got your 2211 or 1122. And that's at the 19 delta. That's only 85 cents. Again, I don't really know what people do. I don't know if the 1122 is as popular as the other 1122 or 112. Jeez, man, there just needs to be names for these. These are so confusing. Anyways, I feel like I need to get $1 or else it's just not worth my time. So if I bump it to the 21 delta, 5 points wide, that gets to the 19 delta. And, you know, I'm here at the money at the 40 delta. And that gives me $1, maybe slightly over $1 credit. And if I check out the curve here, oops, here we go. So that needs to go, you know, from here down. I get into the bonus area of $200 roughly, and here and up would be $100. All right, so I think I'm going to go with that. I'm going to review and send here at $1, not that account, define the risk, and let's see. It's going to take roughly $800 of buying power. It's up at $1.03. It's getting close to closing time on the market. I'm going to try to get this filled here. Oh, come on, give me $1. There we go. Got it filled at $1. So come back here and go to the analysis. And there we go. So with the positions here, if we stay above the current price, anywhere above the current price, make $100. And if we go down a little bit, I can make 200 bucks. That's at expiration, right? The plan is to take off the shorts and get a free hedge, and then this is what it's going to look like. All of a sudden, I'm going to have a free hedge that's at the money currently. So we'll see. Like I said, I feel like the market should come down, but no one can predict the market. So I just got to be in it, and hopefully it works out. Go back here to the position tab real quick. And here we go, XSP. And I'll group this together. It looks like I had 11222. So I'll group this together and it'll be 1122-3. Yeah? Yeah. There we go. Claims I have a 73% pop. I forgot to look before I got the order filled. That always seems to go down. I think when the order was being submitted and filled, it said more like 78%. Not that it really matters. I mean, basically you go to whatever the delta is, whatever you're shorting on the delta. You know, this is at the 21 delta. So, you know, 100% minus 21 would be 79. So that's basically how I always figure it. I don't know why the platform always kind of deviates slightly above or below that, but whatever. I'm sure they have some fancy calculation. Anyways, it seems like since I got that filled, it's moved up just slightly. So that's kind of the best. That's kind of what we want, right? It goes up a little bit, time decay, you know, hopefully in a couple weeks or a month here, take these two short puts off, short put spreads off here, and then these become free hedges again, just like these are free hedges. So, all right, I think that's it. As far as these hedges, you know, this is down $9. I gained 2 on the day. I'm still trying to figure out exactly when to take profits on the hedges. I think someone chimed in and said they aim for 30%. If they're getting a positive 30% profit, they take it. And that makes sense to me. You're probably not going to get like a big crash all the way to like in the money. So taking them early makes sense to me. This hedge here, which is older, it got $2 today. It's down 18 total, so whatever. This iron condor, this is the one I really need to come back in today. Let's see, 87. Looks like it made about $25 profit there today. So that's what I'm looking for. I mean, I just need it. I bet this, the other put side of it that I recently sold on, is just gonna end up being a wash or maybe a small loss, but it's kind of just insurance I put on. But anyways, this is why I don't like iron condors. They just, you get whipsawed to death, it seems like, and you can never make money on them. But let's see, because if I come here, I mean, right now I'm down 96 on the call side. And then that other one I opened, I'm break even. So there you go. All right, anyways, got my first XSP in here. And yeah, I guess that's it. I have a spreadsheet here that I need to fill in, but I guess, I don't know, I guess I could show you that real quick. All right, here's my spreadsheet that I track my trades with. I'm just gonna copy and paste 2 of these, start a new trade. I don't know what I did there, I messed up. All right, so this is XSP, XSP, and 1122-3. And then these are the 450, 445, and up here it would be, I guess, the 475. Am I doing the big one. Yeah, we'll call it 475 and 474. That's the short put. This is the long put spread. Expiration is May 17th, 2024. So 17 May 24. And that is, I guess I gotta go back here. That's 122 days. Open today, which is the 16th of January 24. Close, duration, delete those for now. 2 short spreads, 1 long spread. No credit for that. Let's see. So this is the short spread. I got 132, but that's for 2, so divided by 2 would be 61. Or no, I'm off. 66. There we go. So 66 per contract there, but I have 2, so the total credit is 132, which matches this 132 there. Then the fees is $4 plus 51.6, which is 452. And there we go. All those fees stay the same. I can probably just leave all these, but these aren't the same there. And let's see, I have not closed this yet. Oh yeah, and then all this stuff is, I do this more just out of curiosity than, I don't know, maybe once I eventually get the like historical, data over a few months, it'll make sense, but for now, I am just keeping track of it just because I can. Oops, wrong one. Where the hell am I? All right, so that was 39.38. 39/38. And then these were 21.18 approximately. So if we re-highlight these, I'll show you. That was a 1, 1, 2. All right, so yeah, when I highlight everything as if I'm going to open another new trade, it says 79% pop. But I've opened the trade and now it says 74%. So I don't know. I guess I'm going to go by, it's like, what do you trust? I guess to be consistent, I'm just going to go by what it estimates the pop at, so 79%. I guess I'm just putting those for both. IV rank says 15.7. I rank close. Share price open, we'll just call it 476.60. And then that's it. So if it's a winner or a free hedge or a loser, I put end result, right? So right now these free hedges could transform into winners. But so far, no losers. I mean, I've only done this 3 times. So, all right, I guess that's it. Oh wait, I don't have this. That's only for the, That's only for the short side. So let's do the same thing for the long. So that's a credit of, or a debit of $32. So that's 32. And then the fees are gonna be the same, I assume, 227. So that's 227.3, yep. So let's copy that down. Copy that too. And copy that. And there we go. I think that's it. I already did the rest. None of that changes till I close it out. Yeah, I think I covered all my bases. All right, so even if I take profit here at 50%, let's say I buy this back at 66. Oops, that's not what I mean, 33. So that'd be 50% of max profit, 66 bucks. Even after fees, that'd bring in $60. And then my free hedge is 32. So 60, if it was 60 minus 30, that'd be $30, right? That I'm pocketing. So be 28 bucks, I guess. Not a lot, but I don't see, it seems so small. But this whole last year, I was doing iron condors on this account, and I literally got nowhere. It's at 2,900 right now, give or take. And last year it started like 3,000, give or take. It wasn't all iron condors. I was trying to do some other stuff too, which was stupid. So that's probably accounts for the lost $100. But I'm telling you, man, these iron condors, just whether it's a stock or the index, they just have not been working. I don't know. I don't know if it was an unlucky year or what, but I mean, I've been doing this for 4 years, and I swear iron condors just cannot consistently make money. You'll win a bunch in a row, and then you'll just take one that's like nearly a max loser, and it wipes out all those that you just won. So, I don't know. Anyways, we'll see how this goes. You know, that's only at 50%. If I go down to like 20, that'd be 70%. You know, obviously, we'll see. I don't know. I mean, this one I took, that was 82%. This is 73%. If I can get down to like 73, that'd probably be more realistic. I'd like to pocket $50. So that means I need to get $100. Well, not quite 100, but what, 90? So there you go. If I get 72%, that would be $90 profit. Subtract out the 32, you know, 90 minus 30 is 60, so it's 58, yeah, somewhere in there. So if I get to approximately 70% of the max profit, that will give me $50 of profit that I pocket no matter what, and then that would give me a free hedge. Yeah, seems like a plan. We shall see. I don't think it can do much worse than the iron condors were treating me. So I know Tasty Trade loves to preach their mechanical stats on iron condors, but man, they just have not worked for me. So I don't know what to tell them. Real life does not reflect their back testing, at least in the last year. If you have any tips on the defined risk 112 or what is called the 1122, I would love to know, because yeah, it's been really hard to make money in my defined risk account lately, because you have to get a lot closer to at the money when you're selling these things, and they just don't work out. At least they haven't been this last year. Hopefully by eliminating the call side things, it will work out more in my favor, because that was the problem last year. No matter what I put a strangle on, almost no matter what, the call side was always getting breached and tested, and which would ultimately make it fail. It would either break even or bust, or I'd just lose a few bucks. And especially after you add the fees in, it was just annoying. So time to try something new. This seems pretty conservative. I mean, in general, the market goes up over time. Obviously, there's years of big pullbacks like 2022 and 2020. But are we going to have another bear market pullback of 20% or more for the third time in like 4 years? I don't know. I doubt it. Doesn't seem likely, at least statistically speaking, but you never know. So anyways, I'm just basically playing the market to the upside. I've got this trade on, and then combined with these 2 free hedges, in theory, you know, come here, turn off this iron condor. That's the main thing that's messing up. Here we go. So that leaves the 2 free hedges. You know, if the market tanks, doesn't even tank, if it goes down about 5%, you know, this in theory can max out at $136. It says today I would be up about 70 bucks if it went down that much. So if I win 70 there, and then my stop loss would get triggered. Let's see, that's the one thing I didn't talk about. Somewhere between 200 and 400 would be my max loss on this trade. Okay, well, if you have any tips, let me know. And I'll see you later.